Welcome to another S&P 500 weekly analysis. The market has been coming down. The fear and the bearish sentiment are beginning to build. In this video, we'll look at the pulse of the market. We'll look at the market sentiment and the market internals to see how fearful are the market participants and how bearish they are. Then we'll analyze the price action and see where the market might be headed. Stay tuned. Now, starting with the S&P 500 cash index, this monthly chart, we see that the month of March has not been kind to the market here. We see there's a huge drop right now, and it looks like we're going to have a closing a negative month. We only have one more trading day for the month of March. And on this weekly chart here, we see that it broke this trend line, and also last week it put in a bearish outside engulfing candle here. So we are looking at the possibility of continuation of moving downward in the coming week. And here on the daily chart, you see that right now we made a little bit of a pivot up here, and now it's turning down. So we've been one time framing down for the last three trading sessions. So we see this low down here is likely going to get tested and be taken out in the coming week. And here's the Dow Jones Industrial. The Dow Jones Industrial also broke this trend line and also below the 30 SMA cloud here. And right now it's also pivoting down. So wouldn't be surprised to see this low get taken out as well in the coming week. And here looking at the New York Stock Exchange Composite, it's still trying to hold on to this trend line here. See it kind of been chopping around this trend line. Although on Friday it broke down from it. So we'll see. Would it be seeing a continuation move down and take out this low here in the coming week? And the NASDAQ 100, it came back and back test this trend line, and it flushes down at the from Wednesday on, and right now it's coming down to this low here. So we probably will see the NASDAQ 100 come down and test this low and take out this low. And here's the Russell 2000. See the Russell 2000 broke down from this trend line here and never really got back anywhere close to it. So right now it's just continue to move back down, and most likely it will take out this low here in the coming week. And here's the transportation. The transportation has also been showing a lot of weakness, and although it's trying to come back up here, but this is a little bit of a trap, and we'd likely see the transportation come down and take out this low. And most likely we'll see it come down, probably test this low down here at the 13,460 area. So now let's go and take a look at the market sentiment and the internal and see how the market participants are feeling nowadays. Last Friday, we saw the market sold off with tremendous amount of selling pressure. If you take a look at this up-down volume ratio here for the New York Stock Exchange, at this point here is more than 8-1 in favor of the down volume. And for the S&P 500 is more than 10-1 in favor of the down volume here. And also looking at the daily advance, we see more than 1,800 at one time, for more declining issue than advancing issue. Now, remember, we have a little bit over 3,000 stock trading in the New York Stock Exchange on any given session. So if you are having a 1,800 and 1,900 more of declining issue than advancing issue, that means if you take this 1,900 subtracted by the 3,000, let's say 3,000 was traded on Friday, then you basically have only 1,100. And that, let's say we split that in half. Half of it is advance and half of it is decline. Then you basically got 550. So now you're talking about 2,450. So that's basically a little bit over 80% of the stock that were traded in the New York Stock Exchange on Friday are down. That is a market participation on the downside. So not too many stock is actually up. And similarly, if we take a look at the S&P 500, there's 500 stock. We have 319 more declining stock than advancing stock. So once again, if we take this 180, split that between advance and decline, that is 90. So you basically have over 400 stock that are down in the S&P 500. So again, you're basically looking at more than 80% of the S&P 500 stock on Friday were down. So here on the daily chart, we see that the market actually finished down with a minus 6.7 on the up-down volume ratio. In other words, there were 6.7 times more down volume than up volume. And the advanced decline, there were 1,685 more declining stock than advancing stock. And here, looking at the sentiment chart, we see the VIX is back inside of this 2030 zone. So definitely the market participants are feeling a little bit fearful now. And also the put call ratio is inside of this 0.75 and 1 zone. And this is a little bit more of a hedge zone. And once you get up to 1, then basically we know that the market participants are getting bearish. So right now it's getting a little bit bearish, but may need to more of a hedging on protecting some of the downside possibility here on the put call ratio. So when you get up to 1 and above, that's when we see the market participant buying put, betting on the downside. And here looking at the New York Stock Exchange new high, new low, we did see a little bit more new low on the New York Stock Exchange on Friday is actually 133 stock make new 52-week low. But compared to back here, which is 288, and notice that the S&P 500 is much higher than where it was on Friday. So again, we basically remember we were talking about possibility of a capitulation on the New York Stock Exchange new high, new low. So you can see this pivot low here. We actually have a a little bit less amount of new low versus new high. So again, we see that we are looking at the possibility of taking out this low here and put in a lower low. So we're going to be watching the new high, new low to see what it spike down and take out this low, or would it remain to be above this low here. So that will be a tell that we'll be watching, and that could give us some clue on the possibility of a continuation on a lower move, from the S&P 500, or will it be able to find some support and starting to get a little bit of a possibility of building a base for a reversal. So that's basically what we will be watching from this particular internal. Now, looking at this cumulative AD line from the New York Stock Exchange, remember we were looking at this negative divergence here between the S&P 500 and the AD line. And now we're basically looking at a little bit of a positive divergence. Looking at this S&P 500 low here, we actually got a little bit of a higher low on the AD line. So it'd be interesting to watch when we see this S&P 500 come down and put in a lower low to see will the AD line also take out this low and possibly come down and take out this low here. So that is something to keep an eye on for the coming week. And now looking at the NASDAQ, you see the NASDAQ 100 came down, but look at the up-down volume ratio. It's only minus 5.4, so it's only a little bit over 5-1 in favor of the down volume. But look at these spike here. These are huge spike. These are minus 23 and minus 21, and that's basically these lows here. Right now, we're still sitting above these low. So it'll be interesting to watch when the NASDAQ 100 take out these low here to see what the up-down volume ratio looks like. Would it be able to take out these low here? Now, the AD line did indicate it was market participation on the downside. There were 2,672 more declining stock than advancing stock. So definitely, almost the entire market in the NASDAQ is pretty much down. Pretty much 90% of the stock were down in the New York stock, in the NASDAQ market. So that's pretty broad market participation on the downside on Friday. And here in the NASDAQ, new high, new low, similarly to the New York Stock Exchange, we saw this spike down here at this particular flush down here. Now we are looking at the possibility of this low be higher, this low, if we see the NASDAQ 100 come down and take out this low. Now we did see a little bit of a amount of issue, make new 52-week low came up. So that's why we saw a little bit of a spike coming down. But again, we did not see it come up and take out this particular spike up, which is 683 stock make new 52-week low on this particular day versus on Friday there were only 415. You see that's a tremendous selling pressure on this candlestick. And also we saw, well, not too much on the up down volume ratio, but on the bond market participation, 90% of the traded stock on Friday was pretty much losing price, going down. Now here looking at the Nasdaq cumulative AD line, once again we are seeing some negative divergence here. See that the Nasdaq 100 closed higher than the previous low close here, but we look at the cumulative AD line that actually put in a lower low on Friday. So we're seeing a negative divergence between the Nasdaq cumulative AD and the Nasdaq 100. Seems to be the opposite of the S&P 500 versus the cumulative AD line in the New York Stock Exchange. So beware of this, this negative divergence is going to tell us that this low most likely going to be taken out. So just keep an eye on this and see how deep this negative divergence is going to develop. Remember, we're still looking at this huge negative divergence here. So for the NASDAQ market, the AD line have been negative for quite a while. So this negative divergence might not mean too much, but at least it is a market message to tell us to be on the lookout for some more downside. So from the sentiment and the internal, we are definitely seeing a broader market participation on the downside, and the market participants are getting a little bit more fearful. Now, does this translate on a closer to a near-term bottom, or does this translate into a new level of panic and fear that we're going to see a much more substantial downside to come? So basically, that's why we watch the sentiment indicators and also the market internal to get us some sense of the market weakness and strength to see where and how much of the market going to move, one direction or the other, and with what sort of a, possible velocity that we might be looking at. And right now it's telling us that this market is biased on the downside here, and definitely fears and bearishness, taking off risk is prevailing in the market right now, and it's growing. So just be careful out there. Now let's go and take a look at the price action of the indexes, the E-mini and the S&P 500 cash index, and also its ETF and the NASDAQ 100 futures, the E-mini, the NQ, and also the QQQ. Let's take a look at the S&P 500 cash index here. And looking at last week, see that last week, remember we were talking about the possibility of coming up into this zone up here at this 5,800 area and try to put in a pivot high. And you see on the first 3 days of the week, it actually came up here. But on Wednesday, it actually reversed down. And it flushes down on Friday, it came down and back underneath this resistance turn support area. And you see that it broken down and came back up and spent some time here on testing this resistance before it broke through on Monday. And now it just came back flush right through on Friday and almost came back down to this lower range of the expected move. And here we see that the market is actually pricing in this resistance, support zone once again on the upper range is pricing in between 5,725 and 5,651.20. And then on the lower zone, the lower range, is actually pricing in this 5,400 level, this support area here that we're looking at for the possibility of coming down to make this, take out this low and put in a lower low, lower high, lower low type of zigzag, and see would it be able to find support here and get a bounce back up, possibly bounce back up and test this 5,500, and then maybe we see another push down and possibly come down to this 51 area, and this is going to be the big one, and we might see a little bit of a bottoming here, so we'll see when it get down there. But for the coming week, we're basically looking at this area here, this 5400 level, somewhere into this support zone, and to see would it be able to find support near this lower range of the expected move being priced in from the market. And looking at the ES, the E-mini S&P 500 future, see that similarly to the cash index, it came up to this upper range here, and then it pushes back down and came down to this lower range, and actually came down to this zone here, this support resistance zone. So for the coming week, we're going to be watching for this low to get taken out. And here's what the market is pricing in for the coming week. It's actually pricing in this zone once again, this little bit of a low volume zone here that is trying to hold support here. Prevent a little bit of a resistance here. So we could see a little bit of an inside type of action and pushes up here. Then we probably get a rejection up near this 5700 area, 5750 area here, and get rejected back down into breaking to this zone once again, and look for this low to get taken out and pushes down to the lower range, somewhere in the 5460 and 5430. So it'd be somewhere in the 5450 area. But we're likely to see the price continue to move down into this low volume zone here, and that will take it down to somewhere around this 5400 and 5350 area here. So that would be the next zone that we'll be keeping an eye out if this low is get taken out. So most likely we will see this low come down. So basically we are looking for a lower high, lower low, and then possibly from here we might get a little bit of a bounce back up to the 5550 and continue to push down for the next leg down into the 5350 area. And for the SPY, the ETF for the S&P 500, see that it also came up to the upper range, pretty much tagging this support resistance zone here near the 575 area, and flushes back down and broke this support resistance zone here, this low volume zone near the 565, and now it's heading down toward this low here. So it almost came down to the lower range of the expected move. And here for the coming week, the market is pricing in the upper range between 571 and 569.80, and also the low range between 541.50 and 537. So we see that it is trying to come up and price in this high volume zone here, this high volume no. So we could see a little bit of a bounce, maybe possibly come up and test this zone. If we could break this zone and come up to the upper range, we might get a rejection back down, and look for this low to get taken out and get pushed down into this lower range of the expected move. And that brings it down to this zone here that we'll see previous support here. So we're going to see would it be able to find support down here at this lower range in the coming week once it take out this low here. Because again, we're basically looking for a lower high, which we got. Now we're going to be looking for a lower low. And looking at the E-mini NASDAQ 100 future here, the NQ, we see the NQ also came up to the upper range and got into this low volume zone before it got rejected and pushed back down and closed at the end of the week inside of the lower range and just above this high volume zone here. So we're going to see in the coming week for this thing to break this zone and put in a lower low and work itself down into this area here, somewhere around this 18,000 level. And here is what the market is pricing in for the coming week. It is pricing in on the upper range between 20,025 and 19,962. And also the lower range is down here at 18,760 and 18,600. So it's pricing in for it to come down, take out this high volume zone, and move into this area here, into the 18,000 level. So we're going to see would it be able to push through and put in this lower low, push it into the low low, and probably might be getting a bounce here. Once it get down to this here, maybe come up and get rejected at this low volume node here at this 19,000, and then pushes down into this high volume area to see would it be able to find some acceptance between 18,250 and 18,000. And here in the QQQ, the ETF for the Nasdaq 100, see that came up to the upper range target, and then it flushed down and came down to the lower range and closed right at it. So right now, we're basically looking for a continuation move to take out this low and basically break this zone here and move down to this 450 area. Now, we could see a little bit of a bounce, and if we do, we probably see a little bit of a rejection up here at this high volume area. And that's pretty much what the market is pricing in right now, just around this high volume zone here at the upper range is somewhere in the 484 area. So it's pretty tight. Now, so we if we get rejected back down, then look for this zone to get taken out, or we might just see a continuation move down on Monday and pushes down toward this lower area here, this lower range between 450, 420 and 449.50, and that will bring it down to this little bit of a low volume area here at 450. So we're basically looking to see would it be able to continue to get a little bounce and then push it down and get a little bit of a bounce back and test for support here. But basically we're looking for this thing to this low to get taken out. So we'll be looking at a lower high, lower low. So those are the price action that we'll be watching for the ES, the SPY, NQ, the QQQ, and also the S&P 500 cash index that I mentioned earlier. In summary, we are seeing a little bit of a turbulence coming down, and that should not be a surprise to us, right? Because we haven't seen a correction of 10% or more for quite a while. And right now, we basically are still looking at a less than 10%, although we did see a 10% down here and then got a nice bounce back up. So even though if it come down to the lower range of the expected move for the coming week, we're still talking about maybe 12.5% of a correction from the all-time high. And even if it come down to 5100 area, it is still above the 20% where the market classified that as a bear market. We only be down 16.7% or so. So we are still in a correction territory, not necessarily in a bear market territory. Although, yeah, a lot of market participants is getting fearful because of the velocity of the downward move. And typically that's how the market behaves, right? It goes up on a escalator and come down on an elevator. So that's why you see this flushing down of the price. So we could see a little bit more turbulence. So just be careful out there. And if you find the content to be useful, be sure to smash the thumbs up to help promote this video on YouTube. And also, if you're interested in getting more contents, to see more content from me, then go visit my newsletter, The Pulse of the Market at substack.com. I have much more content on trade ideas and also on the Magnificent Seven stocks and market analysis, and also your daily trade plan. So go check that out. I have the link in the description below. And be sure to click the subscribe if you are new to this channel, and also subscribe to my newsletter. Thank you for watching and good luck on your trading.